Mastering Bookkeeping Basics, the Accounting Equations. Your chef, namely me, is about to divulge a secret recipe. I know you've been waiting to get the Colonel's secret recipe for Kentucky Fried Chicken. Sorry to disappoint you, but this recipe is actually a simple equation and lays the foundation on which double-entry bookkeeping is built. This equation is called the accounting equation and is also referred to as the balance sheet equation. The accounting equation may be expressed in three forms. 1. Abbreviated or simple version, property equals property rights. 2. Expanded version, assets equal liabilities plus owner's equity, capital. 3. Fully expanded version, assets equal liabilities plus beginning owner's equity, capital, plus additional owner investments plus revenues minus expenses minus draws, dividends. What keeps the accounting equations in balance? The double-entry bookkeeping system. The double-entry system is a type of accounting bookkeeping system that requires every transaction to be recorded in at least two places, accounts, using debits and credits explained later to represent increases and decreases. This keeps the accounting equations in balance. In other words, the double-entry system used with the accounting equation allows us to track. Double-entry system tracks 1. What we got and what went, property assets, the good stuff, and 2. From whom and to whom, property rights, claims to the assets, good stuff. Who has a right or claim to the business's property? Claims to the property, assets, arise from two sources, creditors of the business, liabilities. Those from whom the business borrows from or buys from on credit are called creditors. The creditors have a claim to the property assets of the business until they are paid. These creditor claims are called liabilities. Two common types of creditors are a business's suppliers and bankers. Owners of the business, owner's equity. Yes, the owners also has a claim to the property, assets, for property, assets, invested into their business, and any increases or decreases resulting from operating the business. Developing our different versions of the accounting equation, and no, you don't need an extensive knowledge of mathematics to understand. Since 1. Property equals assets and 2. Property rights, claims to the property, equals liabilities plus owner's equity, capital, the simple or abbreviated accounting equation, property equals property rights expanded or restated now becomes assets equal liabilities plus owner's equity, capital. We're now going to concentrate on the owner's equity capital section of the equation. If you recall, the balance of owner's equity is affected by revenue, expense, investment, and draws on dividends. Summary of the effects of investments, revenues, expenses, and draws dividends on owner's equity. Owner investments increase. Owner's equity. Revenues increase. Owner's equity. Expenses decrease. Owner's equity. Owner's draws, dividends decrease. Owner's equity. Using our prior information, we can present this information in the following equation. Current owner's equity, capital, equals beginning owner's equity, capital, plus owner's investments, plus revenues, minus expenses, minus draws, dividends. This new owner's equity equation illustrates the relationships and effects investments, revenue, expense, and draws dividends have on owner's equity, capital. Let's take this one final step to arrive at our fully expanded accounting equation, which includes all the components that make up and affect owner's equity, capital. Our expanded accounting equation, assets equal liabilities plus owner's equity, capital, expanded or restated now becomes our fully expanded version. Assets equal liabilities plus beginning owner's equity, capital, plus additional owner, investments plus revenues minus expenses minus draws, dividends. The expanded accounting equation breaks down owner's equity into more depth than the basic accounting equation. While all three of the equations illustrate the relationship of property and property rights, the accounting equation most often used and referred to is the expanded equation or basic equation. Assets equal liabilities plus owner's equity. Well, time's up, class. See you in the next session.
We'll be there.